Hey everyone, it's Nick with Us versus Her. If it's your first time here, you like the content, hit subscribe. If you haven't yet, subscribe to our new options trading live channel. I live stream there Monday through Friday. Link is below in the description. And if you want to join our community, the UVH fam, link is below to our Discord along with our free options trading group on Facebook. What I want to do today is kind of like a trade recap / watch list for tomorrow, kind of what I'm looking at. I'm recording this a little bit early for a watch list. I'm taking off the rest of the day. It's my son's birthday, so I'm going to try to do the best I can. But this is kind of a continuation from yesterday. Yesterday we had the missile attacks, and the market bounced back up, and now the market is ripping after Trump has come out and said, tensions with Iran are kind of easing. We're not going to be attacking, but we are going to be imposing some sanctions. So instead of missiles, they're going to impose sanctions. So, right now, based on that news, the market is ripping. For me so far today, so I just want to walk through some of these positions here. I was long / ES. Futures, S&P futures, if you don't know what those are. I'm currently long Boeing, and I got out of FedEx and Home Depot. All these positions I've been holding for a few days. I haven't really been day trading that much, just because of the way the things were going. I wasn't sure in terms of where the market was and where the market was heading. So I've kind of just been hanging out, playing some defense, taking some scalp trades, but really that's all. And starting out today, so Home Depot, all these positions like Home Depot and FedEx actually close out. FedEx is actually up a lot more right now. If we go back to the last 7 days, just to show you how long I've been holding on to these. So FedEx, I put this position on January 3rd. It's now January 8th, so 5 days. Bought it for $1.30. It was a debit spread. Sold it for $2.10 this morning. And the reason why, I would say my realized profits aren't that good is because I was putting these on before all the conflict has happened, and I've just been kind of holding. And there comes a certain point where you want to start to reduce your risk. You don't want to just hold indefinitely, because then if those go out of the money, you're gonna be losing money. Thankfully for debit spreads, they're a little less risky for debit spreads, because you're gonna be long one of the calls and short one of the calls. So I was actually long the 155 call on FedEx and short the 160 call. And FedEx actually right now, something I've been watching, let's see here. Yeah, now I closed it out this morning at 8:41 a.m. So I closed it on this spike, and as you can see, over the last since I put it on, we've been going lower, we've been going higher, we've been going lower, we've kind of just been grinding sideways. So I took this opportunity when it spiked up here to get out of the trade. Obviously, it would have been worth a lot more if I waited up when it hit 157. Sorry, my cough is still just driving me nuts. 157, but I got out at like 156. You don't want to put your profits at risk, and I'll kind of show you the mistakes I made on /ES. Yes, I came out with a profit, but it was high risk what I did with it. So I definitely learned from it, and I'm putting that plan into action. You always have to adjust your strategy, no matter how long you've been trading. You're always constantly tweaking, constantly figuring out your mentality, and also the market's always changing. Going through this missile crisis and bombings and all that, and we had Boeing's planes. We'll talk about Boeing in a second. You have to assess your risk, reduce your risk. Just don't go all in during times of uncertainty, because if you're looking at SPY or the S&Ps or anything, Dow was down 400 points at some point last night. Came roaring back, of course, but we could have had 1,000-point down day, and your positions could have went to zero. And then people that were shorting heavily too were probably mad, because the bears were they haven't been paid in a while, so bears were looking like, man, this is looking great, and then it comes back up, opens up pretty much flat. So you gotta manage your risk, whether you're bullish or bearish. You gotta manage your risk. So got out of FedEx. Home Depot, I got out as well. Not a huge gain on this, but what I didn't like about Home Depot, so I also I've been holding Home Depot since January 2nd. I actually closed it out a little bit later today. At Home Depot, I think that position would be worth a lot more now. Let's see here. I only made like $40 on it, but it was, I made like 30% on it. right now, if I had that same position, now Home Depot is ripping up here to 222. Let's see here. I mean, I closed it out. It was like 220, 221. Let's see here. I had next week's, and all the positions I have. I mean, this is 9 days out. I've been giving myself a lot of time. Let's see, Home Depot. So I had the January 17th 220 call, 225 call. So next week, so I was long the 220, short the 225. Yeah, now it's going for 234. I mean, I got out for $1.92, so I left. It could have been an $80 play. I made pretty good money on that FedEx. I mean, I made 80% on FedEx. I made 30% on Home Depot. And at this point, I was in the mood to sell the spikes and reduce my risk, because a lot of these positions, as you can see here, were negative because of all the things that were happening in the news. And yesterday, Home Depot has been looking pretty good on the 1 year. I've been trading it quite a bit. It's been bouncing off like 216. But yesterday, even though the stock market was pretty steady, this sold off from 220 all the way down to 217. Yesterday, it went as high as 220.60. And today it was back up in that range. It was like 220, 220.50, 220.80. So I took the money because I didn't want it to go negative. And being up in here, looking at the range on the 1 year chart, it's been going from like 221, 222, bouncing back down to 215, 216. So, I knew that we were going to have the press conference today. I didn't want to take a lot of risk. And as I was at the point, I was also already negative on /ES, which I'll talk about here, because /ES, I made some mistakes here. So I bought it originally on January 3rd. I bought the 3280 call for January 13th. Now think about this. I bought it for about 2 weeks out. Already a week has passed, so time is not my friend right now. And because we went so low, I was forced to average down a little bit. I still believe in the position. I still thought that was going to work out. So let me go into /ES here, show you here, and I'll show you these calls. I had the /ES S&P futures. So I had the, let me get the right date here, January 13th. 3280s. So these are still out of the money. And this kind of shows you that you can still make money on out of the money plays, but you have to be really careful for the futures. So now a week has passed /ES. I mean, I only made $62 on this, but it was about 20%. I mean, I made about 20%. I'm not going to complain about 20%, but compared to the movement, I mean, ES was pretty insane. So I saw my position yesterday go as low as $1. It went as low as $1. I paid $4.80 for the first one, $2.35 for the second one, and it went as low as $1. And I was down 70-80%. And then we came roaring back, and my mistake was initially when I averaged down the first time on January 6th, so 2 days ago, before this attack happened, I was actually up. Like if you look right here, I averaged down in here when it was like, I paid $2.35. It was like $2.20, $2.35. It actually came back up to $4.30, and I was profitable. I was up like 70% of the position. I'm like, oh, well, because it came up, I averaged down. It'll probably go a little bit higher. But then, the market did what the market did, and these decreased in price dramatically. So, what I learned from this experience is you have to take your gains, redeploy your capital. That way you can take advantage of bigger moves. Like if I could have took my gains, and then I could have redeployed the capital on this big V-shaped chart, would have made some more money, but I didn't. So I didn't want to put too much at risk. I wanted to kind of scale things back. So my first mistake was, a lot of times what happens if you don't take your profits, it goes down. These could have went down to zero. So that's why I sold early today. I sold these for $4.20. Made the $70 back, but I could have made the $70 or $60 2 days ago. Still up 20% on that position. I could have made it 2 days ago, and that's the risk you have of holding it. And I could still hold it, but you have to think about this. They expire Monday. Today is Thursday. I really only have Monday, Sunday, Friday, Sunday night, and then Monday doesn't give me a whole lot of time if things go bad to play defense. I played defense on it, came out green once, then it went against me. I could have averaged down again, but I don't like to generally do that. And I just wanted to see what was happening. The market was looking like it was coming back. And then with the Trump press conference, we really pushed through. So then I sold, because if we have a retracement here back down to 32.40, I'm going to be down in the hole again. So it's best take the money, redeploy it. There's always going to be more opportunities. Just because you had a good position, it doesn't mean that it's going to continue being profitable, especially when you're trading options. I'm running out of time here, so I had to take the money. I can push that back out. It's a lot better to redeploy profits than it is to redeploy capital at a loss, right? Because then you're always playing catch up. So I took the money this time, and I'm glad for that. But for the S&Ps, I'm looking to see what's going to happen today and tomorrow. I would like it to dip down a little bit, but I'm not going to, I kind of fought that trade a little bit, and it was my own fault. So I'm probably going to stay out of the S&Ps for a few days, possibly into Monday. Then I put on Boeing. So Boeing was one of the stocks that I was watching the watch list. So Boeing, they actually had a plane crash last night in Iran, killed like 180 people. It's unclear what is happening with that. I did buy, let me clear this up. I did buy the 330 call. So let me show you here. 330 call. I bought it for $8.55 at 8:48 this morning. I'm Central Time, so it opens at 8:30. The second one opens at 8:30. I bought this for January 24th, and the reason why I did that is because we have earnings January 29th, and because we've been bouncing off that 330 support, I was actually hoping it was going to crack below 330 today, down into like the 320s. It didn't happen. It was just kind of bouncing. So my plan right now on Boeing is we have earnings January 29th. I'm going to play the long game here. I'm going to be patient and see if we can get back up to the 330, 340, sorry, 340, 345 area. Those ice cubes are probably really annoying on the on the audio right here. So it came down. Boeing came down this morning. I had alert for 330. It did crack it. I did put this on a little bit premature. It was like 331, but because I have a lot of time on it, you don't have to hit it exactly for like a day trade. You have to be more precise. But when you're swing trading over a period of week, 2 weeks, $1.50, that's going to really matter that much in the long term. So my target on here is the 340, 342, 50 areas where I'm going to take my profits. It's probably going to run to like 350, but when I trade options, I don't like to push it to the point of resistance. I just like to find a range, trade within that range, and set realistic goals, because it could get rejected at any point. This could get rejected at 340, could get rejected at 342. So we'll see what happens. But right now, because Boeing, I feel that the bad news is kind of already baked in. They keep having bad news, but they're chilling at this level here. They peaked up, they came back down. They peaked up, they came back down. So right now, it's in my opinion, is building a pretty strong consolidation area, pretty strong support area in here, which it'll probably rip to 350, 360, 370. But the question is when. So that's why I want to give myself the time to do it. So I don't know when it's going to happen. So I did buy in the money, so that way theta is a little bit less aggressive. I'm in the 330, and I did buy a call, at support, versus buying the 332.50 call, where obviously it's cheaper, but it goes in the money, out of the money, into the money, out of the money. It's not. We'll see what happens. But I like to buy them. I like to buy them at support there. But that's pretty much, my P&L came around today, and thankfully you got to take advantage of that. And what I want to be looking at in regards, beyond, I brought it up. Yesterday we didn't get the dip that I wanted to get here, and the reason why beyond didn't happen. So what I'm looking at here is it to hold, like I said before, I needed to hold above 92 to start to fill this gap up to 100. And McDonald's said that they're actually expanding Beyond Meat to 52 more Canadian stores, just testing it out. They were trialing it before. They're expanding it out, so we'll see how it happens. But this looks like a very good by the dip. I would like it to come down to 80 area, but right now I'm just being patient. It didn't come down to my target of 73.50, so we'll see. I don't like to rush into Beyond because when you get FOMO with Beyond is when you get the most screwed with it. Square also was another one. It just been running. I should have bought the dip at 61, 62, and I didn't. And now I'm paying for it. But what I'm looking at on Square here, like I said, I want it to break 68, 70 area for us to get long again. At least for me. Obviously, these are my opinions. If this video is of value to you, please hit the like button. It helps me out so much. Thank you guys. So right now I'm in a holding period. Like I said, I'm taking the day off, spend time with my son for his birthday. So I wanted to do this recap. I'm going to keep this short and sweet. Just wanted to go over some of the stocks that I've been trading, some of the stocks that we're looking at. We'll see how things are going to go right now. So as always, stay safe, stay green. It's us versus herd.